Hey coconuts! Today in TFC Stock Geek Out, we're going to explore a company that even Amazon has given up trying to compete. Amazon trying to compete with everybody, okay? So if Amazon says that we're no longer going to fight these guys, you know how far they have come. What started as a surfer dude project trying to sell surfboards has come so far to develop into a whole suite of services and software for e-commerce, right? So almost every company out there, I would say a lot of companies, at least the companies of my friends, they all use this company to build their e-commerce store, and all the back-end support is amazing. This company has also went on to develop their own capital ecosystem where they provide capital to its community, and also their developer ecosystem where, there's just a lot more features being developed by open source developers, so that, it's not just them developing softwares, there are a lot of other these guys that are also developing additional features and softwares on their platform. So very powerful growth engine for features and all that. So I'm curious, how far can this company go? And joining me today to geek out on this company, which is e-commerce giant Shopify, is Serting, right? So all of you are familiar with him. He's from the Good Investor and compounderfund.com. Once again, if you want to read his research, just go to compounderfund.com, right? Shopify is a company that constantly pushes its limits, and what started as just services and software has come so far, right? And Serting has a lot of praise for Toby, which is the founder of the company, and he believes that this guy has great execution, keep pushing boundaries, keep developing new stuff, and founder-led, right? Founder-led is always a very interesting view of companies, right? So I think that is the focus for today, to try to understand what is Shopify's business model, how far have they come, they're no longer just software, and where can they go into the future. So for your reference sake, this episode was recorded on the 26th of August 2021. So in 26th of August 2021. Our discussion today is solely for education and entertainment purposes only. It does not serve as any form of advice or recommendations. Thank you for loving what we do and empowering us financially to do more for you. Join our Telegram group for continued discussion. Let's geek out. Yes, okay, so we back again today. We're sitting in the house. Yo, how have you been?
Hey, thanks Reggie for having me again. Doing great. Can't wait to get started.
Yeah. I mean, we're gonna be doing this quite often, so it's gonna be a recurring thing, right? And
Yep.
I mean, in your portfolio, there's so many interesting companies, and everybody can actually find all your write up and your research and all that jazz at compounderfund.com. So you should definitely check it out if you have not. But today we're gonna focus on this company called Shopify, right? But why
Mm-hmm.
Shopify is a thing?
Why Shopify? It's actually one of the as of the point of recording, which is 26 August. It's actually one of the largest companies in our portfolio. So it's a company that I am very that I like a lot. And what I also find super interesting about Shopify is its co-founder and leader, current CEO. His name is I hope I'm pronouncing it correctly because it's a German word, but it's Toby Lutke. So I find him to be an incredible entrepreneur. And in fact, I think, in my opinion, one of the best young business leaders in the world today. So that's what really fascinates me about Shopify.
Mm. Did Shopify become your largest position because of the 10 bagger situation that it had went through?
No. So I mean, just to clarify things a little bit, I invested in Shopify with my family's money. I think sometime in 2015 or 2016, and that has done really well. I think it has gone up more than 30 times. If I compare Shopify's current share price to the time when I first invested in it. But or rather, my family actually liquidated most of that portfolio in the middle of 2020, so that the capital could be used to invest in compounder fund. So in the fund itself, the position is definitely not a 10 bagger, but it's still a fairly large position within the portfolio, somewhere around 4%. Between 4 to 5%, simply because it's a company that we think has a lot of room to grow, and also partly because its share price has done pretty well since we first invested in it sometime in July 2020.
Yeah, and I know Shopify has went through a lot of changes, right? I mean, when they first started, they were just doing this whole like web commerce kind of platform. Uh, Essentially, it's a software, right? That's kind of how they started. Over time,
Yeah.
they've added a lot of features, drop shipping. They have built up their own supply chain. They have done the whole capital thing that they're doing, right? So providing there are people that use Shopify with capital, right? So can you kind of walk us through what is Shopify at this moment in time? Because it's
Yeah,
so
sure,
big now.
sure. I think, yeah, no, that's a really interesting question. So you're absolutely right that Shopify kind of started uh, life with like a web commerce kind of solution, and over time just slowly diversified its business. But it's still very much focused on e-commerce, or rather enabling businesses to sell online. And I think Shopify basically sees itself as the operating system for e-commerce for other businesses to use. So that's, I think, how the company sees itself. So what is Shopify today? So Shopify actually, you can kind of split its revenue into basically two sources. The first would be subscription solutions, and then the other would be merchant solutions. So as of 30th of June 2021, Shopify had trailing revenue of about 3.85 billion US dollars, and 31% of that can actually came from subscription solutions. So these are effectively software subscriptions that Shopify sells to merchants, and these merchants use this solution to track inventory, set up an online store, manage the online store, and so on. And the prices there range from like $9 per month in US dollars to more than $2,000 per month. Um, so there are a wide variety of subscription solutions that Shopify sells, and so the $9 per month subscription goes for very simple solutions and for very small merchants. And of course, when you talk about like the $2,000 plus solution, that's Shopify Plus, and that applies to like really large organizations. So I think it's also very interesting that Shopify's subscription solutions business actually serves all businesses of all sizes. So from like the smallest 1 to 2 man type of SME, all the way to like the largest multinational conglomerates like say Nestle or Heinz. So all across the spectrum of corporate sizes, that's what Shopify serves. And the other part of the business of Shopify would be merchant solutions. So that's where Shopify provides other value add services for merchants. So these include things like Shopify Payments, which is a payment processing platform. There's also Shopify Fulfillment Network, which is Shopify's logistics services. So it essentially acts as like an outsourced fulfillment service for merchants. So if you're selling, say, glasses online, spectacles online, and you like to deliver your product to customers who buy from you, you can actually utilize the Shopify Fulfillment Network to help you to fulfill that order. There's also things like Shopify Capital, which is a kind of a financing arm of Shopify. So this is where Shopify provides capital to merchants. So and there are quite a number of other services as well that Shopify provides. And all these services basically help merchants better able to conduct business online, right? So everything is done with the idea of how can Shopify help merchants better do business online. So when we look at this merchant solutions business, so the subscription solutions business is a subscription service. So that's where Shopify charges its merchants monthly. With merchant solutions, Shopify earns revenue from a few different ways, right? So some of the services are charged as a percentage of like the amount of commerce activity that the merchant conducts through the Shopify platform. And some of these are, I think, based on different types of fees that Shopify actually charges the merchants. So all in all, as I mentioned earlier, Shopify put in about $3.85 billion in revenue in the 12 months ended 30th June 2021. Yeah. And so there are, based on the latest numbers that Shopify has released, the company has about 1.75 million merchants from 175 countries that use its services.
Interesting, right? Interesting. Shopify managed to scale beyond where they started. Right, so it's
Yes.
because there are a lot of tech companies you always find a corner, right? Tech companies always do that. Find an underserved population, and then you create a solution for this underserved population, right? And Shopify also started the same way, right? E-commerce, very underserved. They built a solution, but not many people manage to scale beyond to this such a size, right? Beyond their original community, and just kind of keep growing, keep growing, keep growing, and their solution has gotten so far that a lot of big boys are using them, right? So that's pretty interesting.
Yeah, I think
Yeah.
what's really interesting as well, which I think is also a very positive sign on the management team, which we can talk about later, and that is Shopify actually started off as a business to sell I think it was snowboards online, right? They wanted to sell snowboards online. So that was Toby Lutke and his co-founder. They wanted to sell snowboards online,
They
and they
got the
realized
vibes,
that,
they
hey,
got the vibes.
yeah, yeah, pretty cool dude. Yeah,
Yeah.
and they realized that, hey, it's so difficult to sell a product online, and so they thought, okay, let's just build something so that we can sell our snowboards online. But what they found was that the thing that they built to sell their snowboards online ended up being a much more attractive business than just selling snowboards, and so that was how Shopify basically came about.
Yeah, interesting. And you specifically said that people should be very cognizant that Shopify is different from Amazon, right?
Yes,
In your
yes.
thesis, could you kind of help our listeners understand the fundamental difference?
Yeah, sure. So I think the fundamental difference is that Amazon is an e-commerce company. So Amazon has both first-party e-commerce as well as third-party e-commerce. So first-party e-commerce would be where Amazon is the one buying the inventory, buying the products and selling it to consumers. And then third-party would be where Amazon acts as a marketplace to connect merchants with consumers, right? So Shopify does neither of both. What Shopify is doing is to provide services and solutions for merchants who want to sell online. So Shopify itself is not really involved with the actual selling process. What it does is to help the merchants better be able to manage their inventory, better be able to target or find their customers, um, better be able to fulfill the orders that they have received from their customers, and so on. Yeah, so that is the role that Shopify is playing, which is very different from an actual e-commerce company like Amazon.
Yeah, so fundamentally, Shopify is not responsible for traffic in that sense, right? They are
Yes,
not they're not
correct.
responsible for your traffic. They give you all these resources to set up your e-commerce store, and then you
That's
gotta
right.
sell it on your own.
In fact, what Shopify really wants to do is to help merchants to build a strong direct relationship with consumers. So actually, another kind of difference, which is between like an Amazon and Shopify, this is somewhat meta, is that Amazon is can be seen as an aggregator. So what Amazon does is to aggregate consumer demand. And so, like, say if somebody wants to buy, say, toothpaste or toilet paper, they will not go to the producers of toothpastes and toilet paper directly. They will go to Amazon and purchase that. So that's how Amazon kind of aggregates that consumer demand. But in the case of Shopify, it really wants to help merchants build that kind of very strong direct to consumer relationship. Yeah, so that's another, I think, difference. But this difference is more about, I think, philosophy, business philosophy. Yeah.
Yeah, interesting. Definitely interesting. So, but I don't think people should set up a toothpaste e-commerce store. Just saying. But anyway,
Hey,
yeah. So
you never know, you never know.
yeah, okay. You never know. Maybe you should set those like super what do you call it? Like made to measure kind of thing, right? Like if you give
Yeah.
me your saliva composite, whatever, we give you the best. But okay, that's story for another day. Well, what is so interesting about Shopify for you as a business, right? Knowing that this is the business model, like what are some core ideas around this?
Yeah, sure. So I think what's really interesting for me, I think first and foremost would be, I think, the quality of the management team. So as I said earlier, I think Toby Lutke is one of the, in my eyes, one of the best young business leaders in the world today. He's still really young. I think he's only in his early 40s, so or late 30s. So it's still tremendous. I think amount of gas left in the tank for him to continue to lead Shopify. But what is, I think, a few things that I saw in Shopify that made me think that he is somebody special. So when Shopify got listed, I think sometime in 2015 or 2016, Toby Lutke wrote a letter to shareholders that was published in Shopify's IPO prospectus. And in it, he said a few very unique things, right, in terms of the business. So one of the very unique things he said was that, you know, they have an idea of wanting to build value for all the partners that they have, or rather, they want to build value for all the constituents that they serve. And so these constituents are not just it's not just like Shopify the business, but Shopify's customers, Shopify's suppliers, the environment at large, and also of course the partners that are building businesses on top of Shopify. So what Shopify has is this app store, right, where third-party software developers can build software that serves merchants that use Shopify's platform, right? And so in that 2015 or 2016 letter, Toby Luki said that, since the creation of Shopify's business, we have always believed in building long-term value for our partners and people within our ecosystem. And so, they have not been trying to maximize short-term revenue gains. They see that, if they can help deliver more and more value to the constituents within their entire ecosystem, the more valuable the entire ecosystem can be, and the more valuable Shopify can be over the long run. Right? And that has been like a guiding principle for Shopify, and I think that is a kind of a rare thing to happen in the business world. I think maybe sometimes a lot of people can pay lip service to that kind of message, but when I looked at the way Shopify has grown its business, especially like in terms of the number of merchants that have been on the platform and so on, and the amount of gross merchandise value that has been facilitated through Shopify's platform, I think that it's very clear that merchants love what Shopify is doing, right? And they have really gravitated toward the platform. And when I look at that, I think this is a company that really believes in what it's saying, is walking the talk. And I think a really, really good example of this long-term vision and long-term patience toward building value. There's a great example that really shines through, and it happened sometime in June this year. So Shopify announced that it will be completely removing revenue share for the first $1 million in revenue that third-party software developers will earn on the Shopify App Store. And this first $1 million in revenue is something that resets every year. So basically every year, the first $1 million of revenue that a third-party software developer earns through the Shopify App Store belongs fully to the third-party software developer, right? And again, that's a move that could hurt Shopify's revenue in the short run. But I think the value that could potentially accrue to the merchants that are using Shopify services would be immense, because this move really incentivizes software developers to come and build on the Shopify App Store, right? And it really just encourages a lot more innovation, I think, going on there. And I think the more innovative and useful software services that are being produced by these third-party software developers, the stronger the entire Shopify ecosystem becomes, and the more valuable the company will be. And I think it's not an easy move to make, right? To want to cut off a part of your revenue source. But I think this is just another great example of why I think Toby Luki is such a special business leader.
Yes, and I think to put it in context, right? This was 2015, right? And at that point in time, this idea is very revolutionary. Where you have an ecosystem, and then you open up for third-party developers to come in to develop, in-house softwares that will then be sold to your same community, to ensure that your in-house development capex is very, very low. Your OPEX is very, very low. You don't need to hire all these developers to build all these features. You have a third party to come in, or you welcome all these other people to come in to build for your community. This is considered very revolutionary at that point in time. Now, it's like every other software ecosystem has this. Okay,
Yeah.
So we have to be very clear about this. Right? So, but definitely, I get what you're saying, and they have taken a lot of very revolutionary moves in how they view these kind of third-party software developer ecosystem, and definitely helps them to build a lot of features in a shorter period of time with lighter fixed costs. So yeah, that's definitely good stuff. Yeah, but what about other people on their management? Do you have any other thoughts?
Yeah, of course. So I think another really important member of Shopify's management team is the president of Shopify, a long-time president of Shopify. I think his name is either Harry or Harvey Finkelstein. I can't remember the person's his first name. I hope I'm getting it correct, but let's call him Harvey.
Harley, yeah.
Right? Harvey or Harry. I can't remember which one. Yeah. So okay, let's call him by his last name, Finkelstein, which I'm very sure I'm correct. So he has been with Shopify for many years. And I think what's really funny though is how how he entered Shopify. So he was a customer of Shopify for a while, and for a long time he was a massive pain for Shopify because he kept complaining about the service and kept offering suggestions. I think to the extent where Toby Luckey was like, hey, you know what? Let's just give Finkelstein Shopify for free so that he would stop bugging us. But it turns out that Finkelstein did not stop bugging Shopify, and he kept badgering the company. And there came a point in time where Toby Luckey realized that, hey, I think I need a more diverse set of leaders around me as well to help lead the company. And then that was when he decided to bring on Finkelstein, and I think he together with Toby Luckey have been instrumental, I think, in leading the growth of Shopify since Finkelstein joined the company,
I love
which
how
I
you
believe
hire
was
his.
sometime in 2010.
I love how you hire his most annoying customer. because
Yeah,
they
yeah.
want you to succeed, right? Because they really want the
Exactly,
product,
exactly.
and then they keep
Yeah,
disturbing you to want to make it
yeah,
better. So that is a
yeah,
very interesting way to
yeah.
look at it.
Yeah, so I think Finkelstein has been another a very important part of I think Shopify's success. Yeah.
Cool. Well, do you have any thoughts about their compensation structure?
Mm-hmm.
In because I mean it's a tech company, it's growing
Yep.
very fast. So sometimes comms can be a bit complicated. What are your thoughts on their comms?
So I think Shopify has a really good compensation structure. So the company has no short-term incentives. It pays its executives only a base salary, and long-term incentives that come in the form of stock options or restricted stock units. So so in 2020, Toby Luckey's base salary was reduced from about $600,000 in 2019, right, to just $1. So Toby Luckey now belongs to like the $1 club, right? And his total
The Dollar Club
compensation,
CEO.
the Dollar Club CEO. And so his only compensation came in the form of like long term incentives. So in his case, they were stock options and they vest over a 3-year period. So I like seeing companies give either stock awards or stock options that vest over a number of years, because I think that multi-year vesting period helps align the incentives of a company's management team with the company's other shareholders. So in this case, in Shopify's case, that was what happened. Yeah. So so I think it's a very well designed compensations structure. So it's a company that really pays a decent base salary. It's not very high. Pays to its managers, but at the same time, really tries to incentivize them toward long term performance by these stock options and awards that vest over multiple years.
So you like this kind of vesting structure?
Yeah, I typically like seeing companies that pay their management teams over a multi-year period or based on performance, either business performance over a multi-year period or based upon the share price changes over a multi-year period. So, when your options or your stock awards vest over multiple years, the the monetary value of these options and awards are in the end tied to the changes in the company share price, right? And if this change if this change in the company share price takes place over a few years, then it's very likely that the change in the company share price is then influenced by the business performance. Now, of course, if these options or stock awards vest over, say, a 1 month period, then I think that doesn't make any sense at all. Yeah, but if it vests over 3, 5, 7, 10 years, or just a long multi-year period, then I think that makes a lot of sense, because then the management's compensation is actually heavily linked to multi-year changes in the company's share price, which is then in turn linked to multi-year changes in the company's underlying business performance. And that is ultimately what I want to see, right? I want to see a management team that is paid that based on the company's long-term business performance, because that is how I think the incentive will be well aligned. And as a shareholder, ultimately what I want with the company is to see the business be able to do well over a long period of time.
Yeah, good, fair. And it's already very common in the tech space, where more and more techies are being paid this kind of long-term 4-year vesting period of options. But I also like it that more management are moving to this kind of structure, where where the top 9 management are also vested with the shareholders. Actually, we're aligned with our interests. So I think that's very good. But Shopify is no longer a small company, right? So they're already racking in billions and billions of dollars, and they have gotten to a situation where even Amazon pulled out of the e-commerce business a few years ago. They already say they were not going to do the e-commerce solutions. We're just
That's right.
it's a big win, right? It's a big win in the
That's
tech
right.
space. Yeah, where Amazon said, "Oh, we're not going to play this game." That means Shopify already runs so far ahead. All right. So
That's right.
what is their future, growth, and how is their financials looking like?
Sure. So I think in terms of the future growth, one thing that I often like to look at with companies is to look at like the total addressable market that a company has, right? So I think in Shopify's case, the total addressable market is still huge. So recall earlier, I mentioned that Shopify's trailing revenue is about $3.85 billion. So if so, at the end of 2020, globally there are about 68 million merchants with less than 500 employees. So that is kind of like the Shopify sweet spot, right? Where it wants to target these smaller types of merchants and then hopefully grow along with it, right? And so 68 million merchants, and then in 2020, the average revenue per user on the Shopify platform was about $2,300. So when you multiply these two numbers together, you arrive at a total addressable market of more than 150 billion US dollars. Right? And then when you compare it to where Shopify is today, I think that just shows the tremendous room for growth. And I think there's another important dynamic that's related to the total addressable market of Shopify, and that would be the fact that I think the average revenue per user is likely going to increase over time because of the way Shopify can layer on more and more new services to users over time. Right. So as an example, in 2019, the average revenue per user on Shopify was about $1,600. And in 2020, that's nearly $2,300. So significant jump in the average revenue per user. And I actually can see that increasing as well because e-commerce today on a global basis, right, the penetration rate is at best, I think, in the mid-teens range. Right, so e-commerce as a whole has a lot of room for growth. So that would also mean that the merchants that are using Shopify services, not all of them will grow, but at least there's a strong tailwind backing many of these merchants that are on Shopify's platform, right? And then that could potentially lead to an increase in the amount of services that they use on Shopify, as well as increase the amount of gross merchandise value that flows through Shopify's platform. Right, and because the company also charges for some of its services based upon the amount of gross merchandise volume that flows through its platform, that's just another way for Shopify to really increase its average revenue per user as well. Right, so I think that when we look at like the total addressable market, when we look at the global e-commerce penetration, and we look at where Shopify's revenue is currently today, I think it's just very clear that there's just tremendous, I think, amounts of room for growth. And another important statistic, I think, when the total global e-commerce market was about $3.9 trillion US in 2020. So that's $3,900 billion dollars. So when we look at like the projected total addressable market that Shopify thinks it can get, and compare that to the global e-commerce market, we can see that the take rate is actually a very sensible number that is somewhere in the low single-digit percentage range, right? So if Shopify thinks that its total addressable market is gonna be like this massive double-digit or 20, 30, 50% kind of take rate, then I think that's not very sensible. But then when you compare like its potential total addressable market, and you look at that as a take rate of the overall e-commerce market, and I think the numbers still look very much sensible to me. And so I think it's just, to me at least, very clear that there's still a significant amount of room for Shopify to grow. And so but just having the room for growth alone is not enough, right? Another important part of the equation is that you also must or rather, in my point of view, the company must have a high probability of being able to take advantage of that growth, right? So when I studied Shopify's historical financials, I think that this is a company that has executed tremendously well. So just for some perspective, in 2012, Shopify's revenue was just below 24 million US dollars, right? And today, on a trailing basis, it's at 3.85 billion dollars, right? And if you look at Shopify's revenue from 2012 to 2020, so the company ended 2020 with about $2.9 billion in revenue. So that's an annualized revenue growth rate of about 83%. So very strong growth. And I think also interestingly, when you track its take rate, that means revenue over GMV, right? You can see that it has remained very much constant, somewhere between 2.4 to 2.6% over those number of years. And so I think it just shows that this is a company that has been able to provide a lot of value for its merchants, and it's just growing simply because more and more merchants just happy to come on board the Shopify platform. Yeah, so I think this is a company that has executed really well, and so I think chances of it being able to continue growing in the future, taking advantage of that big total addressable market that it has, I think the chance is very high. And of course, it also helps that that Shopify has, I think, just this really, really good entrepreneur at its helm, which is, of course, Toby Luki, I mentioned earlier, right? Like, just the fact that he has this very staunch belief in building long-term value, I think that will be tremendously helpful in terms of Shopify's future growth.
Yeah, definitely helps that he's a snowboarder. But yes, that's just disturbing him. But he's done a great job. Okay, but yeah, can you me expand a little bit on the idea of take rate? Like, why is it important to keep it stable and consistent? Like revenue divided by GMV.
Right. So I think at least for now, keeping an eye on the tick rate is important because I think it also gives us a window into how Shopify is thinking when it comes to building long-term value. Right. So I think in the next few years at least, if I were to see Shopify's tick rate increase significantly, then I would be a little bit worried. The increase needs to be happen for a good reason. Because I think that at this current stage, it makes tremendous sense for Shopify to just try to build as much value as it can for merchants that are using this platform and for all the other partners within its ecosystem. And if Shopify's take rate is high, it means that the amount of value that it's providing to its merchants, all else being equal, is actually lower, right? So I will want to see that take rate kind of being constant. And then another thing, of course, is that if the take rate is currently low, then the chances that it can increase in the future is definitely higher. Whereas if let's say the take rate is already currently say 20%, then it's very hard, I think, to envision a future where this take rate can continue to increase, right? And so the company's overall business growth then will have to rely nearly solely, I think, on just winning more merchants to its business, and to a much lesser extent in terms of layering on new services. But in this case, because the take rate is still so low, right, I think there is the potential for just two powerful tailwinds to help power the company's growth in the long run in the future, which is an increase in number of merchants that are using the service, as well as slowly increasing that overall take rate, which can then lead to much higher revenue growth.
Yeah, in other words, a lower take rate means it's cheaper for enterprise to use their ecosystem, right? So if it becomes
That's right.
higher and higher, that becomes too expensive, then
That's right.
it slows down their acquisition. It reduces their value to come to customers, which are enterprise trying to set up e-commerce shop, right?
That's right. That's right.
Yeah, good. Okay, so but later about 2019, 2020, that period of time, Shopify was toying with setting up their own logistic network, which is super heavy, right? Because in a sense, all their business from the start to then, was all very light. Very software, subscription, services, payments, capital. They were all very light businesses in terms of like asset light businesses, right? There's no big cost that is ongoing, but they have decided to go into logistics, right? Doing drop shipping, doing this kind of logistical services to support their merchants. What are your thoughts on it? Are you concerned?
So I think it's a really great move. So I'm not adverse to investing in businesses that are capital heavy. The capital heaviness has to be for a good reason. And in the case of, I think, Shopify, I think it's investing in logistics is a very natural and very smart move to make, I think, because if you want to be the central operating system for commerce activity for your customers, then I think it's just very natural that you want to have a solution that is as comprehensive as possible. And when it comes to e-commerce, a very important part of the entire e-commerce what do you call it, interaction between merchants and consumers would be that last mile fulfillment, right? Meaning where to the point where the consumer actually gets the product. So that is a very important point of interaction between the merchant and the consumer. And so I think that if in Shopify's case, if it really wants to be like the central operating system, then it will need to provide a really robust logistic solution as well. And there's also value in Shopify providing such a service. So currently the Shopify fulfillment network, which is the logistics service that it provides, is still quite young, relatively young. The company is still kind of figuring out how it wants to build it and so on. But one important thing that it's currently doing with Shopify fulfillment network is really try to aggregate a lot of these fragmented third-party logistics services providers, right, and bring them all onto the Shopify platform. And so what happens is, you have Shopify being, just kind of aggregating all of the logistics demand that its small merchants are looking for, and then try to connect them with all these fragmented third-party logistics services providers. And then so Shopify can then become a very valuable service provider for not just the merchants, but also the logistics services providers, because it's just completely inefficient and not possible, for these logistics services providers to knock on the doors of each, small merchant asking, hey, do you have a packet to ship today, and so on, right? It's just not something that is economically feasible, right? And so, by having Shopify be that connective layer, I think that can be tremendous economic value that can be unlocked for the logistics services providers. And so that's something that Shopify is investing in to build as well. Yeah.
Okay, great. I just want to clarify that sounds like they are not planning to actually own the logistic network. They just want to build the layer of, matchmaking platform for the last mile logistic provider and the merchants. Is that the situation, or going forward they are planning to even bite into this last mile logistics to in-house their own logistic infrastructure?
No, so I should clarify. So being that connective layer is something that Shopify is working on, but at the same time, it's also trying to build its own in-house fulfillment capabilities. So it's kind of moving on two ends together. Yeah.
Okay. Yeah, they will build where they can, then where they cannot yet, they will direct to the third party, right? They'll pass to the third party to do it.
That's right.
Okay.
But I would say that I think trying to be the connective layer would, I think, at least for now, be the easier path forward, I think, simply because you have companies like Amazon, which is investing significantly higher amounts of capital, just strengthening its own in-house logistics capabilities. And so I think that is going to be very difficult to compete against. But then when you are able to, just kind of aggregate a swarm of these fragmented players together, then I think collectively, they can be a force to be reckoned with as well. Yeah. So I think being this collector of fragmentation, I think is perhaps the easier way forward for Shopify.
Great. Good clarification. Thank you. I want to also dig your brains a little bit into the payment network that they're building, and also the capital network that they're building. Because I think the base layer of subscription services, all those software stuff, people understand. It's quite easy to understand as a business, right? But I do think some of their biggest growth engine will be in the merchant solutions layer of things, and that is the part where payments come in. That's the part where capital comes in, and this two part, could you kind of expand for us a little bit? How does this business work?
Sure. So payments is where Shopify basically helps its merchants process payments. So basically when a consumer purchases a product, is Shopify there in the background helping to process this payment. And Shopify is actually working with Stripe, right? This online payment processing company. So Shopify has slapped its own logo and all that as well on top of the solution that Stripe has built, right? And
White
so this
label.
is this thing called kind of in a way, and so effectively, what it's trying to do is to minimize the friction that consumers face in e-commerce, right? So Shopify claims, and have I think good reason to believe what they say. And they claims that Shopify checkout, which is part of that payment solution, is actually one of the fastest in the online space. So and when it comes to making online payments, the smoother your overall experience is, the higher your conversion rate will be. And so that's one sort of like value add that Shopify provides to the merchants that are using this Shopify payments, right? And in terms of Shopify Capital, that is the service where Shopify distributes loans to merchants. So I think in many parts of the world, even in like developed economies, small, medium-sized businesses sometimes have difficulty accessing the capital markets. And by accessing the capital markets, I mean, sometimes they have difficulty obtaining financing for their business needs. Sometimes they go to banks and banks are not willing to lend to them. And this is where Shopify steps in, because Shopify, especially for merchants that have been on this platform for a long time, it can have a very direct view, of how well this merchant's business is doing, and it can then, assess the risk of lending money to this merchant in a very smart manner, right? And then I think so this is where Shopify is again trying to provide a valuable service to some of its merchants. It says that, hey, I see that your business has done very well over the past few months or past few years, and seems that there's a very good sales window coming up. Let's say it's Christmas time, right? And this small merchant is like, I have so much demand that I think I can fulfill, but I just don't have the working capital to purchase more inventory from my suppliers ahead of time. And then that's where Shopify can step in, right? It says that, I can look at your numbers and I know that, the business you have is the real deal. And I think that, if you can find a financing partner, that would be very useful for your business. And so this is what Shopify Capital is trying to provide, right? Just this solution to help finance very promising merchants that may have difficulty getting financing support from the mainstream financial market.
Yeah, and that forms an amazing flywheel, right? If you think about it, right? The companies, they are not big enough to get financing, but because I'm Shopify, you're using my platform. I know when your money comes in. I know how much you transact. I know all the data. So with all this
Exactly.
data, I can build an algorithm to kind of evaluate the risk of you repaying. Right?
Exactly.
So
Exactly.
yeah, and then with that, I give you money because I'm confident enough within my algorithm to know that, okay, I can lend this person this amount of money. Whereas the bank does not have the information. They only see your balance
Correct.
sheets.
That's
Right?
right. That's right.
And then you grow, the GMV becomes bigger. Oh, everybody happy, and then the cycle keeps
Yeah.
growing, keeps growing, keps growing. Right?
Yeah.
So
So the more GMV there is, the more revenue there is for Shopify payments, the more revenue there could be for Shopify the subscription solutions. If the merchant becomes larger and graduates to the
yes.
more expensive subscription packages, for example. So yeah, you're absolutely right that there's this very strong potential for a positive flywheel to develop.
Yeah, very, very wild, very crazy. When I first heard they are doing this, I was like, oh, that's pretty cool. Okay, but also clarify these days, more and more people also doing it. So
Yeah, that's right. More and more
Shopify,
companies are doing that.
they always start this new random thing, and then it proves they work. Then other people kind of copy and
Yeah,
go along.
that's
So
right.
that is pretty cool.
But I
Yeah.
would say
Okay.
that I think Shopify does have an advantage in there, in the sense that because they already are a vendor or supplier that merchants are very familiar with, right? And so I think that there's just this natural, I think, kinship that merchants may have with the company that would perhaps make it easier for merchants to want to rely on Shopify for financing rather than third party providers. But of course, if somebody comes along and says that I can provide you financing at much more attractive terms than what Shopify can, then I guess it's natural that merchants would want to move elsewhere. But if something like that happens, then I don't think I don't think it's beyond the ability of Shopify to be able to react and counter such moves.
Of course, yeah. So that's the cool stuff. Okay, so what are some of the? I mean, we talk about all these different products, features, the team, the finances of the company, and all that. Like, can we kind of come together to talk about some of the modes of this company?
Right. So I think the strongest competitive advantage that Shopify has would actually be Toby Lutke. Because I think by virtue, okay, so I think that he has a very unique point of view about the world, right? There was this really good essay written a few months ago, or maybe a year ago or something, I can't remember. But and I sadly can't remember the author, but the essay was fascinating in the sense that it talked about, it drew an analogy in Toby Lutke's business strategy with the game StarCraft. Are you familiar with StarCraft?
Uh, not. I won't say I'm familiar, but I know got three races. They fight. Yes, I know.
Yeah, yeah.
I know
I
the.
think it's Protoss, Terran, and Zerg. So it's what they call like a real time strategy game, right? So
Yes,
where
yes.
you pick a race, and then each game starts off as you just having a few small units, and you're supposed to build like different types of structures and different types of units, and go
Yes,
on to
but I
attack. Yeah.
yes, but I have to say, StarCraft is an amazing game in the sense that the three different classes of characters are very, very different. It's not like other
Yes.
games where it's like a different skin, but the features are similar. No, this is like three different classes that are very different, and the power balancing is done very well. Although I don't play
Yeah.
it, sometimes I watch it. So I thought, wow, this is quite cool, this game. Yes.
Yeah, so Toby Luki is actually a very avid StarCraft gamer. I think I have even read somewhere that he has hired somebody purely based on the person's ability in the StarCraft game, right? So he hired a StarCraft gamer, and just because he's this really really good StarCraft player, and 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 so uh, the favorite race that Toby Luki likes in StarCraft is Zerg, right? And Zerg is a very unique race in StarCraft because early on it's quite weak. The individual units in the Zerg race is just weak, right? But what happens is, over time, if you're able to fend off your opponent's attacks in the early game, and you do this thing called the Zerg creep, which is where you swarm the map with a lot of small units, then in the late game, the Zerg race is effectively unstoppable, right?
Yes.
And so this author kind of drew this analogy and looked at what Shopify is trying to do, and basically analogizes it to the idea that Toby Luki is trying to build this Zerg creep in the real world, right? It's trying to really all kinds of small merchants, all kinds of small businesses, empower them with the tools to succeed, and then go on to attack the world of e-commerce. And I find that to be a very fascinating kind of window into how I think Toby Luki thinks about the world of business. I can't say for sure if that is exactly what Toby Luki is thinking about, but I think the author makes very compelling arguments, and I kind of agree very much with what the author is saying. And in fact, I think if you look at some of the moves that Toby Luki has made, like when Shopify made the announcement that it was going to remove all revenue share for third-party software developers on the Shopify App Store for the first $1 million in revenue, Toby Luki actually sent out a tweet, right? He made a tweet that says that, very interesting tweet. So it says that, your bracket increased margin is our opportunity. And this is actually a wordplay on a famous quote from Jeff Bezos, which is, your margin is my opportunity, right? And I think that is fascinating because I think it shows just the belief that Toby Luki has in that, if I empower all these small little so-called Zerg units over time, I can do this Zerg creep and just go on to dominate the world, right? And I just think that it's just a fascinating kind of business strategy. And so I think that just having Toby Luki at the helm of Shopify is just the biggest competitive advantage that the company has, because with him at the helm, he's setting the tone for the company, setting the culture. And what happens is then I think it flows down, and employees in Shopify are just constantly thinking about how can we build long-term value for the company by empowering our partners, by empowering our merchants, and so on. And I think that is a North Star that is that's very hard to replicate, right? I mean, like if I were the one running Shopify, and I had the opportunity to remove revenue share for the App Store, would I really do it? I might not, right? Because it also goes directly against the very human nature of greed, right? It's just a very normal and human thing to want to be able to make as much money as we can. But in the case of Shopify, it's very capable of being able to delay that kind of gratification over the short run, and I think that just comes from Toby Lutke. Yeah, and having read interviews by him and so on, I just think that he's just a very unique polymathic thinker as well about the world, and so that helps also to create this very strong culture, I think, within the company. So when people often talk about workplace culture, they have this idea that it's something that is like static, right, and they're like core values they believe in and so on. But in Toby Lutke's case, he has a firm belief that culture is actually something that is evolving all the time. And what is important is to make sure that you do not disrupt the evolutionary process. Right, of course, you need to keep an eye to make sure that the evolution is happening in the right direction. But if it's evolving, then it's important to not break that. Right, and that is just something that I think is again unique. I've seldom come across business leaders who think about a company's culture in this way. And of course, when you look at the kind of success that Shopify has in the business, just that tremendous revenue growth, and in recent years, just this explosion in free cash flow as well. Then I think that a lot of the unique things that Toby Lutke is trying to implement within Shopify is working out. Yeah, so I think he is like the most important competitive advantage for the company. I understand that the answer may be a bit of like a cop out, right? When you talk about competitive advantages, people often think about things like intellectual property. They think about being a lowest cost producer, right? And some other types of competitive advantages. But I think it's also important for investors to realize that all of these competitive advantages that you see actually come from the company's management's past actions. And it's the past actions that have led to the current competitive advantages that you see. So I actually see that ultimately a company's competitive advantage would be the management team. And that is why I think in the case of Shopify, I'm very adamant that the real competitive advantage that Shopify has is Toby Lutke.
Fair. I think I already see a pattern after doing this with you a few times. You're always very big on the management, and I think it's important, right? Because some of the best leaders will lead a company through all sorts of weird times, right? So I think that is a very fundamental important part. And by recognizing that things are fluid, you know that you cannot just rely on whatever there is current advantage that you have. Right, but whereas a good team can kind of keep meandering around and finally get it to wherever they want to go. And of course, specifically for Shopify, it sounds like they want to take on Amazon. So you need some crazy guy to take on Amazon. It's not so simple.
That's right. That's
Yeah.
right.
Cool. Okay, so I think we all can agree that they are riding on tailwinds. It's going to the future. So more and more e-commerce, digital interfaces, and all that stuff, right? More reach, more accessibility. So those things I don't think we really need to expand. But what are some of the risk factors in closing, right, for this company? Because we cannot everything like very positive, right? So
Of course,
what are
of
some of the
course.
risk factors? Yes.
Yeah, so I think the biggest risk factor for Shopify would actually be key man risk, and key man risk essentially means uh, the risk that the business's growth could be harmed if a certain or a few or one individual leaves the company. And in this case, I think if either Toby Lutke or Harry Finkelstein leaves the company, then I think that can be potentially very detrimental to Shopify's future growth, because then you lose. The company could lose could lose its North Star, right? In terms of having that long-term goal of empowering merchants, building value for partners, and so on, right? And then if you lose that kind of leader at the helm, then the North Star could potentially disappear, and I think that could be dangerous for the company. So that's my biggest risk. There are a few others. I mean, there's also like the risk of competition. So, like Shopify is providing a software solution and other types of digital services to help merchants conduct businesses online. And there is no shortage of competition, right? I mean, there's always the chance that somebody will come up with a better mousetrap, right? So I think there's that. And of course, I think you rightly pointed out that Shopify sees Amazon as one of its biggest targets, right? But Amazon is itself a very formidable company. And in Jeff Bezos and of course now Andy Jassy, it has incredible leaders at the helm as well. And of course, full disclosure, my fund also owns shares in Amazon. It's also one of the larger positions that I have within the portfolio, right? So yeah, I like both companies a lot, but I think it's you can never really fully write off Amazon, right? Especially when it's quite clear that Shopify wants to compete against Amazon's aggregation efforts, right? And I think another important risk I think is dilution. So Shopify has over time been shown to have been issuing shares quite a bit. So just for some perspective, let me just pull out the numbers very quickly. So I think so let's say in 2016, 2016 I think that's when, or 2015 when Shopify IPO'd, right? Its share count has actually nearly doubled from then to 2020. So that is like a kind of like a mid-teens rate of annual increase in the share count. So that is very high. But the good thing is that when I look at Shopify's revenue growth, it has significantly outweighed the growth in the share count, meaning that on a per share basis, I think the company is still building value at a significant rate. But ideally, ideally I wouldn't like businesses that have such high dilution. So that's another risk that I'm looking at. And then I think another important one would be, of course, the valuation. Shopify is not a cheap share. Yeah, so I think Shopify is today trading at about maybe 60 times trailing revenue. So that is a very high multiple. So even if, let's say, I assume that Shopify has a free cash flow margin of say 30% today, that 60 times revenue number will equate to maybe about 190 times free cash flow, which is super high, right? And that is of course a risk when you pay very high valuations for companies, and if the company does not deliver, then you're in for a painful ride as a shareholder. But in this case, I'm just happy to pay up because I think that Shopify is just a very unique and world-class business that likely has significant room for growth ahead, right? You can probably compound its top line anywhere from 30 to 50% easily, I think, over the next 5 to 7 years. And so because of that, I see the high valuation as a risk, but not something that would cause me to just completely stay out. So I think to recap, I talked about key man risk, I talked about dilution risk, I talked about competition, and I talked about valuation. So I think these are the important risks that I see with Shopify's business.
Cool, good to know. And anyway, I just want to say that I am very okay with a company that is at a very high valuation to dilute its shareholders. Okay, I know it's a very long discussion, and we probably should organize like a few people kind of online discussion on like how do you evaluate like growth companies, right? Because at that stage they're land grabbing, they're innovating, they need a lot
That's
of capital, and you want them to keep growing. So as long as the top line is running like the top line running 2x higher than dilution, then that it may be a good move, right? So that's a whole different discussion.
I completely agree with you actually.
Yeah. So that's a whole different discussion. We'll do it at another time. I think a lot of people are very interested in how to evaluate growth companies. It's very different from all the value, metrics and all those things that's being talked about out there.
I think we definitely should have that discussion because I actually don't see that there's a big difference in how you evaluate growth companies versus what people traditionally learn about investing. So I actually don't see big differences there. The biggest difference I think is just having that imagination of being able to think about how big a company could become. Yeah, and yeah, of course, I mean that's a discussion for another day. But I'm definitely keen to have that.
Great. Okay, so I got one man in. So we will organize something like that sometime down the road lah. Okay, thank you, bro. See ya. I hope you guys enjoy good stuff. Take care.
Thanks for listening. Thanks for having me. Bye bye.
Yeah.
So I hope you learned something useful today and definitely recognize that investing is a personal decision. We're not here to give you any recommendations, but we're always happy to geek out with you on interesting companies and trends for the future, right? So this series has a lot more depth and terms. So if you have any questions for us, do join our community Telegram group or DM us on our socials. Link is in the description below. If you love us and will help us grow, definitely share the podcast with your friends and on your socials. And to stay tuned with what is happening in the markets and in the TFC network, do sign up for our weekly newsletter at thefinancialcoconut.com. With that, I hope you have a great day ahead and you improve to become a confident, insightful, and disciplined investor, ultimately creating the life you love while managing your finances well. Also, yes, give us 5-star rating on your favorite podcast channel. Bye.